traders, it's Danielle. Today I'm going to be talking about a setup that I have in the communications sector. That's going to be XLC. So first of all, this does qualify as a 5-star setup because it has number one, a trend, which is down. Number two, it has a Fibonacci cluster that has been a key area of resistance. And then also number three, it has a squeeze. So I like the communication sector, and I think it can trade lower, especially with the overall weakness in the market. The majority of the sectors right now in the S&Ps are trading lower, and while some of them are nearing oversold levels, such as energy, industrials, and transportations, I still think that there's more downside to come in the communication sector. So what does that mean for us as traders? Well, number one, I like to look to trade XLC itself with puts. That's a lot easier. A lot of times, if you don't want to trade an individual stock that comes with news risk, it's a lot easier to trade just the ETF sometimes. If you would like to indeed trade an individual stock, here are a couple of them. Number one, I really like Netflix. So Netflix also has a daily squeeze, and while it has already traded lower off of the 300 area of support, I do still think it has more downside to come. So I'm looking at placing a bearish butterfly around my downside targets in Netflix. The next two are going to be Google and Facebook. So out of the three of those, Netflix is really my favorite, but I do see more downside in Google and in Facebook due to Fibonacci clusters. The reason why Netflix is my favorite is because it has the squeeze. We can also look at a couple of the different stocks within that sector. There's also CHTR, EA, Verizon has already started trading lower. And while I do think that we have potential to trade lower in those names, Netflix remains my favorite. So let's go ahead and look at the chart segment, and I'll walk you through the ideas.
All right, so let's go ahead and look at the chart segment. So this is the sector, XLC, the communication sector. As you can see, we're in a downtrend. You can see that based on the price being below, the price bars being below the moving averages. You also have red grab candles, and you also have a chart that continually comes up and hits resistance and falls. All of those signs are indicative of a downtrend and how we quantify it. Now, what I have here is a Fibonacci cluster that comes in at 45.79 to 46.07. What that means is when you're shorting off of that level, you really have to have your stop above this level in order to give your trade a chance to work. So with it trading at 43.61, it's not the best entry. A better entry is usually up around the 34 EMA that would come in about $1.25 higher or so, but it's also not bad. And the thing about this is if there is some type of pullback, you could get a better entry, or you could just add like a third entry here and then potentially add more on a pullback. So looking at this here, I've got a target of 41.42 with a stop around here. So you're pretty much about 50-50 on that, right? So you don't ever want to be risking, you don't want to risk like 5 to make 1 or even 3 to make 1. But risking 1 to 1 here is pretty good. The way that I typically like to play those are really just Delta 70 puts about 30 days out or so. And I think playing the sector is a lot easier than playing an individual name. For example, I was short Facebook this week, and this one has been strong. But it just rallied directly up into resistance. So Facebook is in the communication sector, rallied directly up into resistance at the 50-period simple and at the fib cluster there. So you have your stop loss zone right there, and then you have your target at the 1272, which comes in at 121.32. You can also notice that we're getting really overbought on the ready aim fire. So typically when you get a ready aim fire sell signal, it's typically when it starts to fall. So that's what I'm looking for there on Facebook, and I'm targeting 121 with resistance at 135 and then 131. So if you can't break through that resistance, then you know, you can't get to your full target, obviously, but that is a heads up that you're not going to make your full target. The next one is Netflix. This one was coming through today. I'm already short Netflix with a call credit spread up around this level up here, but I still think there's a lot more to be had in this trade, especially since we got the ready and fire sell signal today. We have a daily squeeze that I believe is going to send it through this support zone and down to this target zone here. So on Facebook, mainly due to the resistance and because it's been strong, I would do a more conservative trade such as a call credit spread. But with Netflix, I already have a call credit spread on. It's coming through just fine. So I think I'm going to add a butterfly down at the 236 area. So I really like butterflies because they're really good risk to reward situation. You can typically risk 1 to make 3, and even if you just take it off for a double, it's a pretty solid trade and easier. It's an easier trade to sit through the type of volatility that we're currently experiencing. If you look at Netflix on a lower time frame chart, you have another zone you can define your risk against. So, you know, if you're using it for a longer term swing trade, you really have to use these larger levels. But if you're just using a 30-minute chart, it's just a shorter time frame chart, you can use this as your stop and then use 254 as your target on a shorter term basis. And you can see there's a squeeze there as well. Those green dots mean it's firing to the downside, which is why it's coming through. So shorted Netflix yesterday against this area of support, but I would like to add on to it. I would also like to add to Facebook, and XLC puts all look good.
All right, traders, thank you so much. I hope you had an awesome week. One more thing I wanted to point out that I'm really excited about is the launch of John Carter's 3rd edition of Mastering the Trade. We got our author's copies the other day right here, but you can find it yourself on Amazon starting December 18th. So, you know, pretty much everyone who comes to us, I mean, we always tell them about the book because people always ask us, how do you get started, you know? And now we have Foundation, which is really meant to distribute video content and trade ideas each week. But something like this, I mean, this is our Bible. This is our baseline. And everything you want to know about the squeeze, about trading directional options, also especially psychology, is huge in this book. John is my #1 mentor. Henry's my #2 mentor. You can find both of them in here. And I was also lucky enough to get a contributor spot as well. So you can read a little bit about my trading journey and my 5-star setup in here. So it's going to be available on December 18th. So check it out on Amazon. And if you're not already a member, come to simplertrading.com/join. And I'll see you in Foundation. For those of you who are members, thank you. We appreciate you so much. I hope you had an excellent trading week, and I'll see you in the next one.